Hey, welcome back to LR Options. In today's video, we're going to be going over some questions that new traders have about trading, such as what is options trading? We will also be going over examples of options trading. We'll see how options trading is a way to participate in the stock market, whether the market is trending up, down, or just ranging without moving very high or low. We'll also see how to read a stock chart using candlesticks and moving average indicators. Some of the important parts to know about options are its stock symbol, what type of stock, what type of trade is it? Is it a call or a put? Your strike price, your premium, which is what you're going to be paying to enter the trade, the expiration date, the amount of time you're going to be able to be in this trade, and how to read a stock chart, basics, trend, whether they're going up or down. If you're new to my channel, please consider subscribing. Okay, so let's look at examples of what options are. So let's go to the platform. And over here, we're looking at AMC. So AMC right now is at 27.20. We've got the January 21 expiration showing. At this expiration date, let's say you feel that AMC is going to be going up to, let's say, let's pick let's say 27. No, let's pick 28. So the price to pay, the premium price to pay to enter that trade would be $2.50. $2.50. Each contract to enter an option trade is made up of 100 shares. So you would multiply $2.50 by 100, and that would give you $250 to enter this trade. Now let's say you feel that the options, the stock AMC is going to be going down. Let's say you feel it's going to be going down to 26. So you feel the stock price will be going down. That would be a put option. That's a bet that the stock will be going down, and that would cost $2.16 premium to be paid to enter this trade. Again, each trade contract is made up of 100 shares, and that would be 100 shares multiplied by $2.16, and that would be the price of entering that trade. Let's go to a stock so we can look at a stock. Let's look at stock examples. Hey, welcome back to LR Options. In today's video, we're going to go over some questions that new traders have about trading, such as what is options trading. We will also be going over examples of options trading. We'll see how options trading is a way to participate in the stock market, whether the market is trending up, down, or just ranging without moving very high or low. We will also see how to read stock charts using candlesticks and moving averages indicators. Some of the most important parts to know about options are its stock symbol, what type of option, whether it's a call or a put, its strike price, the premium, which is what you pay for to enter the trade, and its expiration date. We'll also see how to read a stock chart, basics, whether it's going and whether the trend of the chart is going up or down. Okay, so let's begin with what is options trading. Well, options trading, let's go to the platform. Options trading is basically you betting whether the stock that you are interested in is going to be either going up or down. So if you feel that a stock is going up, that's usually a call trade that you will be placing. If you feel that a stock is going to be going down, well, that would be a put trade or a put option. And that means you feel the stock is going to be going down. Over here, we're looking at AMC. And these are the calls. If you feel that a stock is going to be going up, you will place a trade using this side. And you would choose your expiration date. You would choose the premium you want to pay. In this case, it would be $250, and that will be multiplied by 100 because every contract in trade options, when you place a trade, is a contract, and every contract is made up of 100 shares. So that would be 250 times 100, and that would be 25. Well, no, $250. Okay. If you feel that the stock is going to be going down, then you will place a put trade. So that would be on this side. This is where the puts are. And again, you click on the premium you're going to pay according to the strike price. So if you feel the stock is going to drop to 25, okay, you will place your trade up here. The same thing for the call. If you feel the call is going to go up to a certain number, then you choose the strike price that you feel is going to be going up to. And then, of course, there will be your premium, which is the price that you're going to pay for the stock. Okay, so those would be examples of options trading. Okay, let's go to a stock chart. Okay, so let's look at Citigroup, their stock chart, and they're in a downtrend right now. And you can tell because I've got my four indicators here. We've got the red one indicating the 200 moving average. We've got the black one indicating the 50 moving average, the yellow, the 20 moving average, and the blue, the 9 moving average. And the price of the stock is right underneath all four moving averages, indicating that it's in a downtrend. I like to look at these candle patterns because the candle patterns tell me also which way the stock is going and which way it's heading, and if it's continuing in the same direction. So we've got the red candles over here. We're looking at November 12, and we've got red candles going down. Okay, then we've got green candles, and I also like to look at a pullback. When you're looking at the pullbacks in a downtrend, you're going to be looking, I like to look at the green candles. And because right after the green candle, there should be a red candle coming up. And if there's a red candle that comes up, and it passes the green candle, that's when I like to enter the trade, because that's telling me that trade is going to continue downward, and it's gonna continue moving down. So I enter that trade, and I like to hold on to it for maybe 2 days, 3 days tops. So if I would have held on to it here, it would have fallen from, let's say I would have entered at 67.51, and the next day it would have opened at 63.75, and I would have closed there, and I would have had a nice profit there. Again, we've got the next day a red candles going down, and if you've got a red candle, you've got it followed by another red candle, That's a good indication also that the trend is continuing. So let's say you enter 64.08 and you exit the next day at 62.68. That's a profit right there. So again, we've got a little pullback over here, green candle. Okay, the next thing, you've got a red candle, passes the green candle, the previous day's green candle. And let's say you hold on for 2 days, and you've got a profit. Same thing, you've got a little candle, red candle, and any red candles near the indicator usually will continue down. Okay, so let's look at another chart. Let's look at Apple. And Apple here is going in an uptrend, and you can tell because all the indicators are below the stock price. So you've got the stock price over here. That's the stock, and all your indicators are below. You've got the 200 indicator, you've got the 50, the 20, and the 9. They're all below the stock. Okay, so let's say we're looking at November 17, and you've got a green candle coming right off the indicator. That's a good indication that the stock is going to continue up. So if you're shy about entering the trade, then you can wait until the next candle, and the next candle the next day opens up green too. That's a good time to enter that trade. So let's say you would have entered at 154.29 and exit either that same day or the next day at 160.48. You would have had a profit, or even a third day, because I like to hold my trades 2 to 3 days. Okay, now over here, November 22nd, you've got a little resting stage. You've got 3 small candles that are not moving anywhere much. Then you've got a red candle near the indicator. Now you've got a green candle. They're pretty much past the red candle from the previous day. So you can enter a trade there, or to be more sure, you can wait till the day after that. Wait for that green candle, $1.60, 160.72, 160.72. Maybe hold onto it 1 day, 2 days, and you've got a good profit there. Over here, December 2nd, you've got a green candle that opens below the 9-day average indicator, passes it. That's a good indication this trend is continuing. The next day, you've got a red candle, but it's followed by a green candle. That passes the previous day's red candle. Good indication the trend is continuing. You can enter there, and you've got the trend going all the way up for how many days? 1, 2, 3, 4, 5 days. Okay, you've got a little pullback, and then it goes back again, pullback, and then it goes back up. Okay, so if you would like to see more videos like this, please consider subscribing, commenting, sharing, and so you don't miss any notifications of my videos. And to summarize, options trading is a way to participate in the stock market. You can place a call trade, a bet saying that the price of the stock will be going higher. You can place a put trade saying that you feel that the price of a stock is going to be going down. We also went over the basis of reading a stock chart, whether we're using the candlesticks to give us an indication as to whether the trade is going to go up or down, or if it's continuing a trend up or down. And we combine that with using the simple moving average indicators. If the stock is above the simple moving average indicators, try to use 2 or more indicators to confirm which way the stock is going. If your stock price is above those indicators, you're in an uptrend. If your stock price is below those indicators, you are in a downtrend. Okay, thank you. See you in the next video. Bye-bye.